The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to this Friday edition of Squawk Box. It's a huge day of news, especially across Asia. I'm Steve Sedgwick with the magnificent Karen Cho, and these are your headlines. So the Chinese rate cuts coming into effect, with the country reportedly considering trillions in yuan worth of further measures next week. You're getting a massive reaction from Chinese equities. They're soaring, on track for their best week in 16 years, since 2008, after Beijing's stimulus blitz breathed new life into sluggish stocks.
Commerzbank and Unicredit come to the negotiating table for the first time since the Italian lender's aggressive stake building, while the German bank's upgraded targets send its shares to the highest level in over a decade.
Good morning. Voting well underway here in Japan for the next leader of the ruling Liberal Democratic Party, and by extension, the next Prime Minister. We're expecting first round results in the hour.
As I said, hello. Good morning to you, by the way.
Good morning. Happy Friday.
Massive news. We've got Sam and Lynn and everyone waiting wings, so I won't take too much time here as well. But whatever the medium to longer term effects of this Chinese stimulus blitz are, it is unambiguous that the stock market, because of positioning beforehand or whatever, is having a ridiculously large rally as well. Whether it's justified or not remains to be seen, but it's an extraordinary day.
It's a monumental week from what we've seen from the stimulus package unveiled. One area of the market that's missed out, we've seen it all over commodities, from gold prices to copper,
Yes.
but the oil price,
Yes.
so it's fascinating around the dynamics of the Middle East. But of course now there's a hurricane too in the mix as we talk about that particular trade.
And a hurricane in the mix normally means the rally in stock, in oil.
Should trade it a little bit higher.
And I think you have absolutely hit the nail on the head about concerns. You mentioned supply. I have concerns about demand, and especially out of China. So we'll come to all of this in the next 3 hours if you're very, very lucky and very, very good. In the meantime, China's central bank has today implemented rate cuts announced earlier this week. Moves expected to release 1 trillion yuan in liquidity into the banking system. The country is reportedly considering further measures, with Reuters reporting of plans to issue special sovereign bonds worth around 2 trillion yuan. And I'll just draw your attention to the fact that yesterday the IIF mentioned that China has one of the grossest growing debt piles. That was even before this stimulus. Now, China's stimulus announcements have buoyed the country's equity markets, as Karen and I just mentioned. Look at the numbers on that screen. It's a very clear screen. Shenzhen, 16%. CSI 300, 15%. The Hang Seng, 13%. In a northerly direction. The CSI 300 benchmark on track for its best week since November 2008. The Hang Seng for its best week since August 2007. Sam, you've been giving us some terrific journalism on this one all week as well. Look, as Karen and I were just reporting, whether this transpires into economic growth, there's a lot of commentary out there, but for now, the market loves it.
Exactly right, because it's sort of like a positive feedback loop, isn't it, Steve? Because we've seen a lot of support for the stock market as part of this package of announcements this week. And this is the part that's really got a lot of these China watchers, their sort of ears pricked up, because they believe it's a lot easier to help the stock market than the real estate market. Will that translate into demand? That is the big question. And that will be key as to whether this rally has legs. But for now, as you say, on course for the best week in around 16 years. And it seems you've summed up the numbers as far as the levels we've been hitting today, recouping pretty much all of the losses that the markets have lost since May. Let's talk about the fact that it's been a little bit too much to handle, it seems, for some of these bourses. We had the Shanghai Stock Exchange coming out this morning saying that they're actually seeing some slowness in some delays around the transactions. And I've just seen Hao Hong, who comes on our network quite often. He has actually tweeted that due to the surging trading volume, the brokers are reporting that some trades have been delayed. It's just simply overwhelmed the stock market right now. There's a huge stampede of stock bulls, he said, and the trading delay means that the index actually should be substantially higher than what we're seeing on the screen. So that very much speaks to the rally we're seeing today. The raging bull is sucking in money on the sideline from all directions. He says the Chinese market is absolutely on fire. So it has that Friday feeling and really building on the rally we've seen throughout the course of the week. Now, this was helped a lot by the fact that the PBOC followed through with another promise today. Before the market opened, we did get that triple R cut by 50 basis points. We also got a cut to the 7-day reverse repo and the 14-day reverse repo as well. The thinking for those, the latter, is that that should tie things over as far as liquidity is concerned for the long holiday that will start on Tuesday for National Day. And, people have been saying this as well, that, they didn't want a bad performing stock market in the lead up to the 75th anniversary of the People's Republic of China either. Let's take a look at the Chinese currency as well, because we've seen a lot of appreciation over the last week too, crossing that 7 mark against the dollar offshore. It looks like a little bit of profit taking as well today, 0.4% in the session. I'll send things back to you guys in London.
Sam, thank you very much for that. And we are seeing the ramifications of the China stimulus for the US markets. If we look at the sector trades yesterday, materials leading the charge up close to 2% and powering the Dow and the S&P 500 forward. You can see 6/10s on the likes of the Dow. 5th positive session out of 6, and we had a fresh all-time high on the S&P 500. The Nasdaq in the mix, still technology names. Another story played out here, and that was around Micron, the sort of demand and supply dynamics that we're sending to the market. So we saw appetite again for the technology basket of stocks, so green patches right across the board for those US markets. Big data point today, though, as we step away from the Chinese situation. Again, double down on the US. Don't forget those jumbo-sized moves from the Fed, the 50 basis point reduction has also carried these US markets forward in a lot of sectors. The next stop, PCE data today, the preferred gauge of inflation for the Fed. And don't forget the market's still somewhat split as to whether we're going to be talking about another 50 basis point move or slimming down to 25 basis points, where some of the Fed members have been guiding. So big data point to watch today. To Treasuries heading up to that event, and we are seeing the 2-year trade higher with 3.64%. At this stage, digesting a bit of jobs data. So we're a bit more elevated than when we started out the week, 3.8 at the 10-year. To the dollar, with this higher yield story unfolding, we've got euro slipping in the morning session down 0.1%. Sterling giving back territory, 133.82, so down 0.2 in the morning session. Dollar firmer versus the Japanese yen, but this pair really interesting as we watch the party voting playing out around the LDP in Japan, and whether this suggests a certain prospect for one candidate versus another in Japan to become the next prime minister. So the positioning is on the dollar trade versus on the yen, dollar firmer versus the Swissy. WTI and Brent, we were just starting the show out talking about how this trade has really missed out on the China stimulus story that has floated the boats of many trades. The concern in the market is whether the Saudis now reach for market share and give up the $100 barrel price tag that they've been reaching for many years. We even have a hurricane in the mix. This is Hurricane Helene, a Category 4 in the United States as it hits landfall, and you can see it is not moving the needle on these prices that are in the red versus gold prices trading around a record. Let's take a look at those Asian markets to round it out for you. And you can see the China stimulus again firing up these markets for another day. Sizable gains. We were already on course for a straight line higher on the Chinese markets for September. Another 2+% on the Shanghai market. Hong Kong going with it thanks to the property stocks. Japanese stocks on the front foot today. That's 1.5% despite the political story playing out in the backdrop. The market, though, seeing a slight fade on the Kospi, Steve.
Super duper, Karen. Thank you very much indeed. Hey, let me just say this very briefly. You can't have a recession if jobless claims are going down. By the way, that's a good thing, despite the fact that some people might say it's a bad thing because they won't get as many interest rate cuts as they want. Look at these jobless claims. Fascinating. They fell last week to 218,000. That is less than expected and marks a 4-month low. For all of you out there who think the US jobs market is cratering, you may be seeing something I'm not. But all I can do is work on the data. 4 4-month low on jobless claims. Now, continuing claims, they ticked slightly higher to 1.83 million, but remained below levels recorded for the summer. Elsewhere, US GDP came in with a final reading for the second quarter at 3% growth on the year. Well, Michelle Bowman became the first Fed governor to dissent, didn't she, from one of the central bank's decisions since 2005, saying she sees a risk that the Fed's half-point cut could be interpreted as premature declaration of victory against inflation. There you go. Bowman sees prominent upside risk to inflation's outlook and said the central bank should move at a more measured pace towards a neutral policy stance. Now, fellow Fed Governor Lisa Cook sounded, of course, more dovish, saying she wholeheartedly supported a 50 basis point cut due to a growing upside risk to inflation and downside risk to employment. Moving on, we are getting to the business end of the LDP election.
We are, and there are some really interesting candidates. The latest crossing the wires now, Japan Economic Security Minister Takeichi. This is the person who could become the first female Prime Minister of Japan. Takeichi has received 181 votes in the ruling party leadership race. That is short of the 368 majority to become the next Prime Minister. So she does not have the votes at this stage. The ex-Environment Minister, Koizumi, has received 136 votes in this leadership race, also short of majority, so that is a step down from the 181. The ex-Defence Minister, Ishiba, is also in the race, 154 votes in the race, that is also short of majority. So the verdict here, no one has the numbers. The leadership vote will proceed to a runoff to try and determine who will win this. So it will be Ishiba versus Takeichi to face off in the second round vote for the ruling party leader to decide who will become next Prime Minister. Very split outcomes here. Don't forget there were 9 candidates in the race. I think Japanese politics has become more interesting after dying down in recent years to become a little bit quieter.
So Takeichi versus Ishiba in the next round.
That's right.
That's fascinating because Koizumi, 43-year-old, US-educated former environment minister, markets had expected a victory for Koizumi, according to Nomura's chief market strategist. So that is absolutely fascinating.
Yeah, others were saying there was positioning around Takeichi as well, and that's where you're seeing some movement in the yen at this point, because the former Prime Minister Taro Aso was intending to have his faction vote for her. So I think there have been different dynamics as to who people were thinking.
Thank goodness we've got a fabulous couple of journalists who are going to just talk us through this.
Indeed we do. We've already seen in the headlines that Lynn is there, and Carrie Joji, don't forget, Carrie Joji was there back in the day as our correspondent on Japan, covering Abe and the arrows that he was firing to try and to spur on the economy. I think it's going to be fascinating to hear Carrie's verdict on this as well. But don't forget all this in the context where we're talking about a BOJ that's already spooked the markets. Its first effort to withdraw from this extraordinary stimulus over the years did cause fairly large waves across international markets. So the question is, what does that type of central bank intervention look like in future, balanced against a new government that would potentially take a different direction?
The FT's Leo Lewis in Tokyo pointing out that Takeichi, now this is fascinating, she basically is a revisionist who has pitched herself as the heir to Shinzo Abe's Abenomics program on fiscal spending. Wait for this though. Says low rates and suggested that the rate rises were stupid, which is quite extraordinary. As we mentioned, Lin and Carrie and Joji join us now from Tokyo for some terrific analysis. Lin, take it away.
Hey, Steve. So basically what we know now is that we do have the final 2 candidates going into that runoff, with Shinjiro Koizumi, who was seen as that early favourite, not making it into the top 3. It will be former Defence Chief Shigeru Ishiba, as well as the current Economic Security Minister Sene Takeichi in that runoff. Both candidates are now giving that 5-minute speech before we go into that second round. But let's bring in now a long-time Japan correspondent, Carrie and Joji. Carrie, how are you reading this race so far? And are you surprised that Koizumi is out of the race?
I'm surprised that these 2 candidates are in the runoff. I think who would have imagined just until recently that potentially Japan's first female prime minister would be someone like Sanae Takaichi, who is a hardline conservative and who could not be further from pushing forward gender issues. I think this is a huge irony here. And I think it's interesting that this vote, of course, this is not by the public, this is by parliamentarians, and they're giving a speech right now to make it seem that this is a very democratic process, because at the end of the day, what's important here is that they try to regain trust from the public. This has been a summer of discontent for the Japanese public. But I think for institutional investor internationally, the prospect of Ms. Sanae Takaichi potentially being prime minister should be worrying.
Well, let's unpack that because, of course, Sanae Takaichi, as you say, potentially the first female prime minister. She has said that Margaret Thatcher is one of her inspirations, right? And we know that she has those very, very kind of out there views, you could say, in relation to the Bank of Japan, as Steve and Karen were talking about, saying that if the Bank of Japan was to hike rates, that would be stupid, that there are merits in terms of a weak yen. What does that mean for markets? And we are seeing the last hour as well that the yen is at around that 146 level, so it has depreciated. Is that telling us anything about the markets?
Well, I think the reaction in the yen is what you would expect and what analysts were expecting should someone like Ms. Takaichi head into the runoff. This whole politician exerting themselves on the Bank of Japan, which is supposed to be an independent central bank, I think goes back to the pre-reform days. And I think that's also worrying for institutional investors as well. But not only on the economics front, but politically, Takaichi-san, just at a time when there's a thawing of relations with South Korea, I think this could ruffle feathers there. And it doesn't come at a good time when you have incursions into airspace and water space by the Russians and the Chinese as well. And then, of course, you have the U.S. presidential elections coming in as well. The prospect of someone like her in this runoff, I think, is what institutional investors were worried about the most. But, you know, we still have a couple more minutes to go. We still have another round of vote. But I think within the next hour, we should know who the next Prime Minister of Japan is going to be.
And I guess for the markets, when we are talking about Takaichi, who is, as I said, wants rates low, Abenomics, fiscal spending as well, I wonder what that means as well for the bond market. It would be a tailwind, you would think, for potentially equities, especially those large exporters like your Toyotas, the other autos as well. But what about Ishiba? Because he is seen as kind of fiscally a little bit more conservative, right? So how do you think that will play out for the markets?
Well, I think beyond that, I think people need to have longevity to see some of these structural issues and reforms through. I mean, you can't address the long-term problems that Japan has, and you mentioned many of them, in one full swoop. And the possibility that the next prime minister could be very short-lived, I think, is worrying because they won't have the time to see some of these economic agendas through. And we could be going back to the era where year after year we get a new prime minister, and that was really not an attractive look for Japan right now. So I think beyond what simply economic measures they can outline, whether or not they have the staying power to implement their agenda, I think is going to be critical as well.
And that is really one of the concerns we've been hearing from analysts, right? Are we going back to that revolving door? I think, you know, post-World War II, the average is about 1.5 years in terms of a prime minister in power. Abe, even Kishida, more of the exception rather than the rule here. What do you think that investment markets, there's obviously a lot of interest in terms of investment into Japan. How do you think they could read, you know, instability, I suppose, political instability?
Investors never like instability, right? I think what we need to talk about now is the prospect of a general election. I think the group of people that are really interested and excited today are probably the opposition party, which has really had not much of a voice until now. But they've been regrouping. They have a new leader. And if someone like Koizumi were to be in this runoff, I mean, the idea was that he's so popular, he could win a general election, and LDP could be a slam dunk for them. But with Takaichi potentially as prime minister, that could change the whole dynamics and the reemergence of a very strong, potentially, opposition party, which could make things very, very unstable.
Yeah, so we do have that election coming up. It has to happen before October of next year, many saying that we're likely to see some sort of a snap election. And then, of course, the Senate election as well. So many risk events ahead. We'll leave it there for now, guys, but certainly a lot more ahead as we count down to the leadership results and therefore getting, of course, the new Prime Minister-elect for Japan as well.
Lynn, that was fantastic. Please give our warm regards to Carrie as well, from Karen and myself as well. Lovely to see her back on the channel. Right, also coming up on the show, crucial PCE data is due out of the US today. We're going to discuss what to expect next, plus time to play nice, really. Commerzbank and Unicredit holding their first talks today. The Italian lender circling with a potential takeover. We'll have more on that this hour. And we're going to discuss the latest AI developments as well as opportunities in the technology space with Bill McDermott. He, of course, is the CEO of ServiceNow. Tune into that conversation at 7:30 British Summer Time. Welcome back. We're set to get another key reading on inflation with the Fed's preferred PCE gauge due later today. Headline inflation is seen falling to 2.3% on the year, but analysts see the core reading ticking up to 2.7%. Sri Koch-Govindan is joining us now, a senior economist at Aberdeen. Really lovely to see you. Thank you for joining us today. I know we're perhaps a little bit late getting to you as well. Just let's talk about the US first as well. What do you make of the data at the moment? The initial jobless claims, I was banging on about it earlier on. I can't see a recession in those figures.
No, that's right. I think the labour market data that we saw from the initial jobless claims, clearly we're seeing there's still fairly healthy labour market conditions at play, but there is this steady move towards, softer conditions as we go forward. And obviously there has been concerns of a recession, but at the moment they're not actually signalling recession, but more of a softer landing ahead. So we are starting to see the unemployment rate ticking up. And I think what was quite interesting recently, actually, if we look at the Conference Board Consumer Confidence Survey, that had actually shown signs of, a slight decline in September, well, a sharp decline in September. And then within that, we saw the details of jobs hard to get or jobs easy to get. And those signals there were actually showing signs of concern about the labour market within that household survey as well. So, a number of different measures that we need to consider when we're looking at that labour market dynamic. And clearly, that's a case for concern for the Fed and Chair Powell.
Sri, this is a market that is looking for confirmation of the data for further jumbo-sized moves from the Fed. But there is a reality in the backdrop around lending costs. And if you've got people that have locked in very low loans and now having to refinance, they're coming back to the market at a much higher level. So I think there are big questions as to whether this 50 basis point reduction is actually going to spur lending demand in the economy to ward off a recession. And some have the verdict simply it may not, because the lending costs are still much higher for a lot of people coming back to the market. So it may not be as stimulatory as one would expect from a 50 basis point reduction.
I think there's a good point in there that it does take time for monetary policy to feed through into the economy and for that to really be felt by households and corporates. So that is part of the story, which is why potentially they went as fast as they did with a very strong start, slashed rates by 50 basis points in the last meeting. But also it's worth bearing in mind that some of the mortgages for households are obviously fixed for very long term. In the US, it's very different to the model that you have in the UK and Europe, where you can fix for 30 years or so. So you're right, in terms of the new entrants are going to find it still a bit harder than they would have done a few years ago. And that will stay the case for a few months to come. So we do expect the Fed to continue cutting, but at a 25 basis point pace rather than 50. They could go 50, but you'd have to see a big deterioration in the labour market, which is what they're really watching at the moment. Rather than inflation, they've shifted their focus to the labour market metrics for now.
There used to be a time when, I don't know, if an ATM in Cyprus catches a cold, we had ripple effects across every global market, but enough of the great financial crisis. China has just had the most enormous stimulus in a very long time. Now, whether it works longer term or not remains to be seen. But we're talking about the ramifications on this channel for China. Occasionally, you might hear something about what it means for Asia Pacific. Do you think this will move the needle on global growth and specifically areas such as United States?
I think this time around it's very China focused. It's not going to be the big stimulus that we saw. If we think of it relative across history, the times that China's been able to really move the global dial has been the GFC. But the scale of the fiscal stimulus there was huge. I mean, what we're seeing now is very small, steady increments in comparison to that. And I think also markets are very excited at the moment, but that's because, if you go from 10 basis points rate cuts to 20 and 30 basis points, then that looks like a big move. But actually, relative to history, it's relatively small. So I think this is really aimed at the domestic market. And I think the spillovers this time from China's stimulus are going to be very contained and very unlikely to impact US growth, either through the trade through the trade dynamics or not. It's going to be very domestically focused.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.